Good day and welcome to SCO BRICS Insight, where we talk about the latest news, information and analysis of what's going on in Russia and the BRICS. Now, my name is Rod Mackenzie, and today I want to talk about how there's been a major U-turn in the global energy sector, with so-called green energy and unreliable renewables now being sidelined by the major energy producers. Now, it's finally been acknowledged by the global energy giants, including BP, Chevron, Exxon Mobil, Shell, and TotalEnergies, that their previously chosen strategy of focusing on unreliable renewable energy sources was a big mistake. The significant investments they undertook into renewable energy at the expense of traditional hydrocarbon energy sources have resulted in seriously unintended consequences, which was a major decline in their profits rather than a projected increase. So it appears that the decision to write off oil and gas was taken too early. However, they're now changing their policies back to hydrocarbons. Now, the global oil majors, including BP, Chevron, Exxon Mobil, Shell and TotalEnergies, have been heavily investing in renewables for the last 5 years. But they've now changed their strategic focus and are now focusing and concentrating on finding new deposits of conventional oil and gas. Now, this move away from renewables shows up in their financial statements, and it also illustrates a major shift in the global trends. Now, it's interesting to note that global corporations have recently started to invest again in oil and gas deposits, despite having been written off as a viable energy source. For example, back in 2020, BP, as part of its forecast for the development of global energy through to 2050, claimed that the peak demand of oil of 100 million barrels per day had already been reached in 2019. Then they said it would never recover to that level it had been before the pandemic. However, their forecasts were very inaccurate, and after the pandemic ended, the world didn't transition en masse to electric cars, as the fossil fuel era is not over yet. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and contribute to its further development. You can do this by making a small donation, which you can do by clicking on the thanks button at the bottom of the video screen on the right hand side, or by clicking on Buy Me a Coffee link, which is below in the credits. Everybody who donates gets a personal thank you from me, and do keep the comments coming. Love to read them, love to respond to them, and some of you are so witty, intelligent, and really have a good idea of what's really going on. Now, it's become obvious that renewable or unreliable energy sources were going to be unable to replace traditional hydrocarbons as quickly as these investors had anticipated. Meanwhile, global energy consumption showed all the signs of recovery following the pandemic. Now, according to the analyst company Wood Mackenzie, the slowing down to a more gradual transition to renewable energy sources has led to an annual increase in the 5% in the demand for fossil fuels. Now, this increased demand has raised concerns that the industry is now caught out as unprepared due to years of underinvestment in new fields. Now, Jessica Siwasek, who's head of exploration for Americas at Wood Mackenzie, has stated that there's a massive need for additional oil and gas resources. Now, at the start of the decade, the industry neglected exploration in order to focus on the renewable energy transition, and now it's scrambling to catch up, she said. Now, the most significant turnaround has been noticed at BP, which invested a substantial $15 billion in renewable energy since 2021. However, in February this year, the company announced a significant increase in its oil and gas sector investment. BP has announced it plans to drill 40 exploration wells over the next 3 years, following the most significant discovery in 25 years in the Brazilian offshore zone of the Atlantic. Now, during a recent conversation with analysts, BP's CEO, Murray Auchincloss, remarked that the significance of the recent series of 10 discoveries, characterizing them as a historic milestone. Chevron is also changing course. It's been reducing its shale investment over a number of years, and its oil reserves fell to 9.8 billion barrels last year, and that was the lowest for over a decade. Now in August, CEO Mike Wirth expressed dissatisfaction with the exploration results over the previous few years, and he's since added in new exploration sites. ExxonMobil CEO Darren Woods stated that exploration is essentially an ongoing commitment that needs to continue. The company recently signed an agreement to explore 4 offshore blocks in Libya and is preparing to resume exploration in Trinidad and Tobago after a 2-decade hiatus. The French TotalEnergies has secured new exploration permits in the US, Malaysia, Indonesia and Algeria, while Shell is currently exploring opportunities in the Gulf of Mexico, Malaysia and Oman. So what's the reason behind these global oil and gas giants changing their mind about investing so actively in unreliable renewable energy sources and moving back to traditional hydrocarbons? Well, firstly, many of them had the conviction that renewable energy would undergo active development, and there was a reluctance to become a polariod when not changing with the times. Now, everybody will remember the famous story of Polaroid, which used to produce the camera with the instant photo printing, which was seen by many as representing the future of the industry. However, development ultimately went in the direction of digital photography, and Polaroid lost ground and went bankrupt. Now, the oil men were keen to play an active role in the new round of the renewable green revolution rather than be on the sidelines of history. So they invested in the new trend, the development of renewable energy sources. And they believed that was the future, according to Igor Yushkov, who's a professor at the Russian Financial University and a member of the Russian National Energy Security Fund. Now, secondly, if oil companies were to ignore the global trend towards renewable energy resources, it would have caused them enormous public image and financial damages. It was imperative for the prominent public companies consider the public sentiment, given the trading of their shares on the stock exchanges and the push by the greenies for the renewables. Now, demonstrating efficiency in the form of capitalization and share price growth is crucial for the management, so they had to follow the trends, even if their gut feeling wasn't there. I mean, for instance, if BP has stated that green energy was not viable, its shares would have declined. Consequently, they made the decision to invest in renewable energy sources under pressure. However, the outcome was contrary to their expectations, with the shift towards renewable energy resulting in major financial losses, and that's despite huge government subsidies. Now, the substantial decrease in investment in hydrocarbon production gave rise to the prospect of oil deficits. So those advocating for the energy transition have expressed concerns about the potential risks involved, citing the possibility of decreased consumption and the potential of a surplus in the oil and gas market within a 5-year time frame, which could potentially impact the return on investment. Well, that's absolute bollocks. I mean, that situation was actually the reverse. As people have been investing less, there's been less of a risk of a supply deficit arising because consumption is not decreasing but growing, according to the analyst. However, the initial enthusiasm has been tempered, and it's now become apparent that renewable, unreliable energy remains costly and time-consuming to implement. So the transition will not be accelerated. In fact, it's going to be slowed down and protracted. It's important to note that the financial returns on investment for green energy is much less than for traditional hydrocarbon energy sources. I mean, in the case of hydrogen energy, for example, there's been unrealistic expectations of the development of hydrogen cars, pipelines and energy storage devices, amongst other projects. However, these expectations were never met, and the plans were ultimately just dreams. Now, Russia, which has significant oil and gas reserves, the shift towards renewable energy and adopting a realistic approach will undoubtedly be advantageous. Oil and gas represents one of Russia's major competitive advantages on the world market, given its substantial reserves, plus the quality of its resource base. Although it is reducing, it's not just them, everybody else is being reduced too. But Russia's a clear direction for the future, and it can still extract significant amounts of oil and gas. And it's also an attractive place to invest in traditional energy sources. I mean, its LNG makes a lot of money. While there's no guarantee if the military operation is over and the Western investments return, Asian companies from China, India, etc. are very interested in collaborating with Russia, plus they're also purchasing the Russian oil and gas in either pipeline or in LNG. For Russia, India and China are the very reliable suppliers to each other, so it's impossible for Russia's enemies to cut off the pipeline supplies like they did with Nord Stream. So it used to be go woke and go broke. Now it's go green and your accounts go red and your profits disappear. Anyway, thank you for watching. Please like and subscribe. Also set the alerts button so you get notified when I post a new video. And if you want to make a donation, buy me a coffee and the link below. Thank you and see you all again soon. Thanks.